Hi, this is Saket. So in this video, we are going to see the new rule regarding the multi-cap fund by Sebi. So over this weekend, Sebi came out with a new rule regarding the multi-cap funds. Before which, we are going to understand what is a multi-cap fund. So if you want to invest in equities, you have three options. One is large caps, mid caps, as well as small caps. So large cap contains companies like Reliance, TCS, HDFC Bank, all big companies which have market value of over 50,000 crores. And mid caps contain stocks like Pidilite, ACC, Tata Power, Vodafone Idea. So these are companies which have the total value ranging anywhere between 10,000 to 50,000 crores. And then we have small caps, something like Relaxo Footwear or Bata, or even maybe for that matter DCB Bank, all such small companies which have a market value of less than 10,000 crores. So when you give your money to a mutual fund, or let's say you invest in a mutual fund, so the mutual fund manager has an option. So if it is a large cap mutual fund, then he will be investing all the money only in large caps. If it is a mid-cap mutual fund, then he will be investing all the money only in mid-caps, and in small-cap mutual fund, he will invest all the money in small caps. But whereas in a multi-cap mutual fund, the fund manager will be investing the money you give in all three, that is mid-cap, small-cap, as well as large-cap. All these days, when you invest in a mutual fund, the mutual fund manager had a choice to invest in large caps, mid caps, as well as small caps in the proportion he wanted. So he could invest a huge number in large cap, little in mid cap, and little in small cap. So Sebi didn't like this. Instead, Sebi came out with a new rule. So before understanding this rule, we will consider a simple example and see how this new rule looks like. Let's say in a state there are three cities, city A, B, C. Let's assume A is the smallest city where only 5 people are residing, and B is little bigger than that where 45 people are residing, and C is a very large city with around 450 people residing. Let's say the central government now allocates 500 kg rice to the state. The state government was given a free hand to distribute this. So what the state government did was, it gave 5 kgs to city A. Since city A was the smallest city with only 5 people residing, it gave 5 kgs to city A, it gave 45 kgs to city B, and it gave 450 kgs to city C. So this way, the rice was distributed to the city proportionally based on population. The central government saw this and told, you can't distribute it this way because I gave you the rice to distribute it more equally. So the central government said, you have to distribute at least 25% to each of the cities. The state government was shocked. Why would the state government give 125 kgs of rice to a population of only 5? So in city A there are only 5 people, and the state government had to give 125 kgs of rice there, and to a population where there were 450 people, the state government could only give around 250 kgs of rice. So with this example, you might understand what I am coming to, that is the new rule of Sebi. So Sebi in its new circular told that at least 25% of the multi-cap fund asset under management should go into mid caps, 25% should go into small caps, and at least 25% should go into large caps. So there must be minimum allocation of 25% in each of the categories. So let us see how it changes the fund allocation. The total asset under management under multi-cap fund is around 1,50,000 crores. Out of this, most of the money has been allocated to large caps, which means the fund manager of various multi-cap mutual funds have purchased stocks like Reliance, TCS, Nestle, Asian Paints, all such big companies. And as per Sebi rule, now they have to remove from these companies and invest more in small caps, which means they will be investing more in companies like Relaxo Footwear, or maybe DCM, Shriram, or many other such small cap companies. So out of this 1,50,000 crores, around 40,000 crores has to be moved from large caps to small caps, which means now the mutual fund manager has to sell around 40,000 crore worth of large cap stocks, and he has to shift it to mid caps as well as small caps. Should he do it immediately? No, Sebi has given him time till end of December. So every 6 months once, the association issues the list of small cap, mid cap as well as large cap stocks. So after the list is released, the mutual fund manager gets to choose the stocks he wants to reallocate the fund to. Most of the mutual fund managers are unhappy with this rule because they before had the freedom to allocate the assets the way they wanted. So when they felt the large caps were undervalued, they used to put more in large caps and they used to sell mid caps as well as small caps. When they felt the small caps and mid caps were undervalued, they used to take funds from large caps and put it to mid caps as well as small caps. But now they have lost the freedom of allocation because 25% has to be allocated to mid caps, small caps and large caps. It is not just that. So the large cap stocks are pretty stable and they offer consistent returns when compared to small caps or mid caps. That's why the mutual fund managers always prefer having more allocation in large caps because they are more stable than mid caps and small caps. So many funds are opposing this rule. They are also having meetings with Sebi to see what best can be done. And few funds have also told that they will be changing the name or the category from multi-cap to large cap funds only, so they can just allocate in large cap funds. We have to wait and see how this entire episode is going to turn out. With that, we come to the end of this video. For more such content, please like, share and subscribe to Optionables. Thank you.